Hey everybody, welcome back to my YouTube channel. Today I'll be going over a trade that we unfortunately missed, but I'll kind of be going over why I wanted to take this trade, what was going through my head, and ultimately we all know that sometimes it's hard to get in the trades, and that was my problem today, unfortunately. But you know, we're learning, we're growing always, and I think even just being able to see the trade set up for and play out exactly how we wanted it to was simply amazing. And yes, I'm still working on getting into my trades, but what can I say? We're learning, right? So let's just hop right into the charts. Okay, so let's just jump right down to the daily time frame. Perfect. All right, so we're on the daily time frame now. Of course, when I was looking at this morning, I was like, wow, we've already reached the daily fair value gap that I wanted to see, but we had yet to take out these weekly relative equal highs up here. Crazy enough, CPI was this morning and we totally shot up, totally going right through this daily fair value gap, right through our objective from yesterday, and of course closing above it with this nice bullish candle. So our next objective was these weekly relative equal highs, and then potentially this high up here. Now we also have a small 1 hour fair value gap that I'll show you down in the lower time frames, which was something I was looking at. But yes, just keep in mind we had shot right past this daily fair value gap, right into our not quite into our weekly relative equal highs, but that was our draw on liquidity this morning. So let's go down to the 1 hour. Perfect. Again, so we have this kind of 1 hour fair value gap kind of way over in the back here. But essentially I was looking, all right, so we have these relative equal highs here. What would our next objective be? So our next objective, of course, is going to be this 1 hour fair value gap, and then potentially these fair value gaps up here before reaching this relative equal high. So I was like, okay, so we have this draw on liquidity imbalance and then these relative equal highs, right? So we're like, okay, we want to see the market either continue to move higher or go lower. But as we all know, the market, we don't pick tops and bottoms. So for me this morning, I was like, all right, we're probably going to draw into this weekly relative equal high, potentially the 1 hour fair value gap before we move lower, if we move lower. Just because we were already kind of at this area, we already had this nice bullish run, and I just wanted to see the market continue to move higher unless we saw something crazy or like a nice displacement down. Yes, we have this large opening range gap, but again, even on the 1 hour, we can see we took out these lows right at 8 a.m., right before the CPI news, taking out these lows. So now we have sell side liquidity and we ran higher, making this sort of displacement run here. So we'll go down to the 15-minute. All right, so now we can see, all right, we actually had these relative equal lows taken out right here, taken out at 8:30, dropped down right before the CPI news, making that kind of displacement higher. We had this large opening range gap this morning. I was like, we could potentially see that being filled in. However, we didn't. I like this 15-minute order block, so I kind of marked it out. It's like, okay, I don't want to see this traded through if we are going to go higher. And yes, we did trade. So when we opened, we did trade lower, but then we moved higher. We never broke these lows right here. So in my mind, I was like, all right, we're going to be going higher today. We're going to go for those weekly relative equal highs. Understanding the draw on liquidity is probably the most important thing, I would say. I even had a realization this morning. I was like, look, like when you know your draw on liquidity, the entries are easy. We know what we're looking for on the 1 minute time frame. We know what we're looking for on the 5 minute time frame. Like our entries are easy as long as we have our draw on liquidity. Now my draw on liquidity was these weekly relative equal highs. I didn't want to see this 15-minute order block broken. Again, we didn't take out the lows, so that's all good news. So let's drop down to the 5-minute time frame. Perfect. Again, so when I'm looking at the market and I'm like, okay, I want to see the market respect PD arrays. Well, one, we have this 5-minute fair value gap being respected even after the open. So that's a clue to me right there. It's like, okay, well, we came down, we didn't break out of that 15-minute order block, we didn't break these lows, and we're still trading inside this 5-minute fair value gap. We're respecting that PD array and we're going higher. So I'm looking for higher pricing. Again, we had this 5-minute fair value gap that we didn't actually quite reach into. So we could potentially use this as a breakaway gap, right? We know the market wants to move higher. The fact we can't even get that retracement back down into the 5-minute fair value gap is a sign that the market's very bullish. And then we have this smaller 5-minute fair value gap, but this one's important because I base my trade off of this one because one, it was formed at 9:55 and we came back down at 10:05, and we know the times that we trade is between 10 to 11. So this one was important. I wanted to see it be respected if we were going to continue to move higher into these weekly relative equal highs, and then of course the 1 hour fair value gap. So let's drop down to the 1 minute. All right, so this is where the fun begins. Yes. Now, obviously we had a very nice run. This one was our 5-minute fair value gap. This was also our 5-minute fair value gap. So funny. My camera's right here and I'm like trying to look past on the screen. Anyways, so this one's our 5-minute fair value gap. We traded down into it. I didn't like how we had that like displacement run. I was like, wow, that's pretty big considering we've been having these like smaller runs higher. But we do like how it came down and we never took out this low. So this low stayed intact right here. We never took out the low, and the bodies respected this 5-minute fair value gap on the 5-minute time frame. So it's important to be looking at different time frames while we're trading. We came back down into the 5-minute fair value gap high, but if you look closely, we have this 1 minute volume imbalance right here and here. If we extend that, we can see that perfect retracement. As you all know, I like to color code my rectangles, so we have that perfect retracement back into that 1 minute volume imbalance, trading higher. Now this would have been my entry, and the reason I decided to use this as my entry was because one, I really wanted to see that market kind of move away from this. I didn't want to see it be respected and go lower. But when we did kind of respect it come lower, we came back down to that 5-minute fair value gap high and that 1 minute volume imbalance. I was like, boom, like that is giving me clues into going higher. And then when we made a new high, breaking market structure right here, we had this 1 minute fair value gap. This was my entry. Obviously, it is not 20 points, but we wanted to see our 10-point run. And we could see that happen pretty easily, especially if we're even aiming for this low of the 1 hour fair value gap. That could happen pretty easily. And this is our main draw on liquidity. So this was our entry. I liked that it came back down into this 1 minute kind of order block, but if you look closely too, on this wick right here, we actually respect the consequent encroachment of that wick. The bodies respected it very nicely. We didn't close below that consequent encroachment. Again, we didn't even take out the low. So this is all signs that we want to move higher. So came in down down to this consequent encroachment of that wick to this 1 minute order block right here, while being in confluence with the 5 minute fair value gap. So we had our draw on the higher time frame objective, the 5 minute fair value gap. We have our liquidity. We have our sort of displacement run on the higher time frames, the 15 minute, 5 minute time frames. And then we have our 1 minute fair value gap entry right here. Boom, down, and then to our weekly relative equal highs. This, I would say, is an optimal trade setup for me. I'll kind of show you guys my checklist. Again, check, draw on liquidity. It's these weekly relative equal highs, and then the 1 hour fair value gap. We traded into the higher time frame objective, check, into that 5 minute fair value gap. We have a displacement run, check. We have that displacement run on the higher time frames. We have somewhat of a displacement run here with this candle, breaking market structure right here, check. Entered in our silver bullet time frame, check. Our entry was 10:19 a.m. We have our entry fair value gap, yes. This one right here, check. Our 10-point TP, yes. Draws to this 1 hour fair value gap, so that's 13.25 points. And then our stop loss is well protected underneath this low right here and right below this 5 minute fair value gap. So all in all, this was a beautiful trade setup. I unfortunately did not get in. I was having a little bit of nerves. I don't know why, I'm just still working on getting into my trades. But it was cool to see this market play out how we wanted to see it, and essentially it hit our take profits. So I mean, what more can you ask for? But yeah, something that I realized was, our entries are not as important as our draw on liquidity. If we can get our draw on liquidity down, it doesn't really matter where we enter, as long as it's in a pullback, kind of as long as we're entering on that down close candle and it makes sense. So we could have entered at this 5 minute fair value gap. We could have entered on this fair value gap. We could have entered on this volume imbalance. We could have even entered at that consequent encroachment of the wick. And then of course this 1 minute fair value gap. And again, we could have potentially even entered here when we saw the market running higher, and then here as well. I didn't want to enter after the market hit our weekly relative equal highs, just because I didn't want to have like a FOMO trade. It was like, no, once that weekly relative equal high is hit, we're kind of done. Like, I don't want to get into anything out of FOMO. So this is my trade. These are my realizations. I'm learning. I hope you guys are learning too. I hope we're all in this together. I mean, we're all trying to just become better traders at the end of this. And I think for me today, just realizing, hey, the draw on liquidity is the most important thing. Don't be too concerned with your entries and simply enter in the market. Like, we're still working on getting in, and I think this kind of shows, hey, you know what you're talking about. You know how to trade. Time to just get in the markets. So thank you guys so much for watching. And if you have any tips for me to help myself get into the trades, like actually push the button, actually enter, like let me know in the comments, because I would love some tips on how to do that, or something that you guys use to combat those kind of feelings when it comes up. And yeah, I would love to hear from you. I hope you all enjoyed this video, and I'll end it here, and I'll see you tomorrow. We'll talk tomorrow. All right. Bye for now, guys. Thanks again.